Welcome to the Fear and Greed Business News Afternoon Report for Thursday, the 20th of June, 2024. I'm Sean Aylmer. Every afternoon, we've got 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.3% today to 7,769 points, dragged lower by healthcare and tech stocks. The property sector did best. Once again, it wasn't a particularly busy day apart from the Guzman y Gomez float. The fast food chain listed today, and by the end of its first session, its share price was up 30%. Among the large caps, Transurban, Coles, CSL and Macquarie Group were among the worst performers. Aristocrat Leisure, Suncorp and Commonwealth Bank were some of the best. There was some good news for Telstra's 1.3 million shareholders. The telco share price hit a 4-week high, though it is still down about 11% since early February. In corporate news, the price of Drone Shield shares hit a new record. They're up 575% over the past year. It came after it said it had won a contract to supply counter-drone hardware to a Swiss customer. Best performer on the ASX today was mortgage broker Helia. That pretty much reversed most of yesterday's decline. Now today it came out and flagged a potential lending deal with Commonwealth Bank. Investors liked that one. It was up 16%. Story number 2, there was more fallout, pardon the pun, in the nuclear debate today. Opposition leader Peter Dutton's announcement yesterday of 7 sites to build nuclear power generators by 2050 has certainly grabbed the headlines, but the consensus view seems to be that what's being proposed can't be done. Prime Minister Anthony Albanese called the nuclear policy a fantasy. ACT Independent Senator David Pocock said the policy was reckless and unrealistic. Tasmanian Senator Jackie Lambie said nuclear energy should be in the mix, but she hasn't yet formed a clear view on the coalition's policy. For his part, opposition leader Peter Dutton warned Australians not to be taken in by Labor's scare campaign on nuclear power, and 2 reactors could plausibly be off the ground by 2035. Story number 3, there's a bit going on in the commercial property sector with 2 big players, Mirvac and Dexus, writing down the value of buildings. The value of many commercial buildings has fallen post-COVID because work from home has culled demand for office space. Owners have held on to the buildings, not wanting to sell in a down market, with deal flow negligible in the past 18 months or so. But ultimately, owners have to revalue and sometimes they have to sell. Yesterday, Dexus said it would lower the valuations of its office properties by 11% in financial 2024, and Mirvac is set to sell a 34-storey office tower in Melbourne CBD and an 11-storey building in North Sydney for a combined 20% discount to their peak values. Story number 4, Mineral Resources is shutting down its high-cost iron ore mines in the Yilgarn region of Western Australia, affecting 1,000 workers. The group said it will try and redeploy as many workers as possible in its other iron ore and lithium mines in Western Australia. Mineral Resources made the decision to focus on its more promising iron ore sites, including the Pilbara, where last month it loaded its maiden shipment bound for China. Over the past week, the group's also agreed to purchase iron ore assets in the Pilbara from BCI Minerals. Now, the company said the decision to close the Yilgarn mine had been influenced by a combination of factors, including the limited remaining life of the 5 operating mines spread over 220 kilometres, and the significant capital cost and lead time required to develop new resources to ensure continuity of supply. And story number 5, there was some good news out of the United Kingdom, with inflation hitting the Bank of England's 2% target last month. It means headline inflation in the UK is now below the Eurozone, the US and Australia. But services inflation remains higher than expected. I think I've heard that story before. It's good news for Prime Minister Rishi Sunak, who is struggling to turn around his wayward election campaign. A poll in the Telegraph this week predicts that Mr Sunak could become the first sitting PM to lose their seat at a general election. It's forecasting Labor could win 516 seats in the Parliament compared to the Conservatives' 53. 516 to 53. That would be a shellacking. That's it for the afternoon report for Thursday, the 20th of June, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X, TikTok and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.